Hi, I'm Dan Wilton, the CEO of First Mining Gold. First Mining is advancing our Springpole gold project in Ontario towards environmental assessment approval and moving forward and have some exciting exploration results at our Duparquet gold project in the Abitibi region in Quebec.
You do. Dan, good to see you. Look, I thought we better kind of touch base because we've had lots of conversations about the stage you're at, what companies may or may not be looking for, but it was, it was kind of just your word for it. Now we're starting to see a lot of M&A. We need more.
We didn't think you were telling the truth, and now, as it turns out, it's starting to play out. Is that what you're saying?
It is. Critical thinking. Who knew?
Yeah.
Right. Well, let's talk about it. Let's talk about some of those deals on the table. So, what have you seen out there? What are the deals which you think perhaps validate what you were saying to us?
So, listen, I think you look at the Goldfields purchase of Osisko this week for $2.1 billion. Recognizing that that's buying them 50% of that project, right? They already owned 50% of it, or we're earning into 50% of it. That's a really, really good value benchmark for advanced stage projects in tier one jurisdictions. And all that we've heard coming out of this deal was, it was caused by some competitive tension, which is always good to hear that there are other people trying to buy these projects. And B, it's freed up a lot of capital coming back looking for a home in the development sector. And so, for us, I think that's really important because it validates yet again, and you can look back over the last 5 years, we can point you to a number of examples, but yet again, 5 million ounce plus gold projects in Canada are the most strategic and sought after gold projects in the world. And when they get acquired at significant values. And we've got 2 of those in our portfolio.
Okay. Well, let's look at those profiles in a bit more detail because I think there are others. I was obviously, got B2 deal in there, Equinox deal in there. Do they all kind of meet that 5 million ounce criteria, or is there more to it? What exactly are these companies looking for? And I guess where I'm going to get to is you telling me how you map to that profile. So what have they got?
So I think important to understand at the point that most of those projects were bought, they were bought pre-construction and bought pre-construction at values well in excess of $500 million. You go back to just coming out of the pandemic when Stephen Dean and Artemis bought the Blackwater project from New Gold. That was $500 million plus when you count the value of that stream. You've got, Kinross Great Bear. You've got the original purchase of Equinox of the Greenstone Gold Project, which was $600 million US pre-construction. At the point where these projects, sizable projects in tier one jurisdictions are de-risked, they tend to attract partners and or acquirers. And I think important just to understand with our Springpole project, we've been walking on that path for years. We entered that EA process in 2018, and we're now targeting submitting our final EA in October of this year. So we've done the hard yards to, I think, ultimately, move forward to demonstrate that this is a project that is going to get its permits. And when it does, I would assert that it's not worth $6 an ounce anymore as it's trading at in the market today. I would assert that it's worth something a lot more like the $200 an ounce that Goldfields just paid for Windfall.
Right. Okay. Because the market's discounting you, but I guess would be interested in is what are some of these potential acquisitors down the line? What will they be discounting you on? Is it technical? Is it grade? Is it location? What are the things that are out of your control? What are the things that are in your control in terms of making yourself attractive to these guys?
Well, listen, I think, everyone wants a super high-grade project in a tier one jurisdiction that's permitted and ready to go, and it's cheap, right? So you kind of can't get all of those things. And I think that's just, again, what this Osisko deal proves this week. So for us, when you look at Springpole, it's 1 gram gold and 5 grams silver. You look at the economics and the operating cost profile, it maps pretty favorably against all the other large open pit projects that have been bought for sure. Certainly maps favorably against Blackwater, maps favorably against a Cote. which has attracted, investment from Sumitomo at obviously at those similar kind of values. So, no, I think for us, the big knock on Springpole has always been the deposit sits under the bay of the lake, and there's been this big question about whether you're going to get through that environmental assessment process. I think every day we keep moving forward on that, and we're coming to a point where, again, submitting that final environmental assessment in October, and then it's a pretty public process from there. You're going to see this project go through a number of steps towards ultimately, we believe, getting that environmental assessment approval.
Right. And where are you in terms of like how far down the line are you? How far away are you?
Well, we started the federal and provincial environmental assessment process in 2018, just for context. So we're a long way down that path. As I said, we submitted a draft environmental assessment in 2022. That's been now discussed and reviewed with regulators, and we've received comments from regulators, from Indigenous communities, from other local communities about the project. We've responded to all of those and incorporating all of those into this final environmental assessment. So when it gets submitted, we're targeting, again, approval by the end of 2025. So it's really, we are at or towards the tail end of that process.
Okay. So look, technically you're saying, look, it's sitting under the bay, but it's not the first time that's been the case. And technically it's not the first time anyone's done this, right? So I guess you're feeling comfortable around that. And the grades are comparable to some of these other acquisitions that are going on. The scale of the resources comparable. I guess it comes down to trying to understand the economics. Now, $2,500 gold takes a lot of the pain away. So what are your thoughts on what the gold price is doing at the moment?
Well, I'll tell you, I'm going to take a step back at our Springpole project, our Duparquet project as well. You got to remember, every $100 in the gold price is $250 million US of after-tax NPV on our two biggest projects. So right. Springpole, we did our pre-feasibility study in 2021. So yes, there's been some capital cost inflation since then, but we ran it at a $1,600 gold price. The gold price is today $900 higher than where we ran that study. So is this a project at $2,500 that's, economic and robust? Absolutely. It was pretty robust at $1,600 in that study. Yet we'll give up a little bit of the economics in terms of capital and operating cost inflation, but not that much. This is at $2,500. This is a shoot the lights out economic project with all-in sustaining costs that are benchmarked in the lowest quartile of the industry in a tier 1 jurisdiction that is capable of producing 300,000 ounces plus a year. So that gets you down, those criteria get you down to a very select group of projects. And, Springpole is one of those projects.
Right. So Springpole, great. And you're kind of advancing through the feasibility study and permitting at the moment with Duparquet. Obviously, PA came out at end of last year, wasn't it? So
about this time last year.
Yeah. Okay. So that's I guess just slightly different weighting there in terms of literally weighting time frame. Spelled differently. So what are the options available to you in a market like this? Is it kind of all or nothing, or do you kind of split up the portfolio? What's the best way to kind of get the best return for shareholders in terms of this portfolio approach you've got?
Well, I think number one, with Springpole, we've recognized it's a sizable project and likely a project that ends up going down the path of finding a partner. So we have a number of those discussions, lots of people interested in understanding the project now, a lot of people waiting to see where you get through in the environmental assessment process. But I think, another thing that this Goldfields Osisko deal gives you real confidence in is the rationale of bringing a partner into these big projects. Someone else who is going to bring some of the technical expertise and a bunch of that next stage of development capital to de-risk it and ultimately help you surface that value. And the value of these projects, in someone else's hands, I would argue, when there's that external kind of stamp of credibility and you take away the financing risk, it's the difference in value between where it's trading today at, $6 or $7 an ounce and $100 to $200 an ounce, which we've been talking about having our entire company set up to take projects through that kind of growth trajectory by getting them to a point where they are, demonstrably viable, permitted projects. And we've been at this now I've been here for 5.5 years and continuously moving these projects towards those milestones. We're getting pretty close. So it's a pretty exciting time.
Okay. And let's be clear about the kind of the cost time return ratio in the sense that, look, going through that kind of feasibility and permitting process, it won't cost a lot of money, but it is time. However, the perceived credibility of getting a strategic partner on board sooner rather than later perhaps could do a lot for your valuation, potentially, depending on who it is and what they're coming to the table with. So again, how do you kind of weigh that thought up in your process in terms of discussions internally when you're saying, like, we should go for it now, get a strategic in now, it'll give us credibility, might even make some gains on our Duparquet project, maybe there is some cash at the table, take a bit of pressure off, or do we tough it out because we're not talking a lot of money, it's just time?
Well, and the reality is it has been a lot of money, but most of it's been spent.
I meant to go, but I meant, yes,
to go. You're right.
Far.
It's really not. Yeah,
not far.
It's really not that far to go, which is a very important thing to understand. Listen, I think you have to be open to those dialogues with potential partners. If someone sees the same thing that you do and recognizes some of that value, there are going to be those that are going to want to move sooner, and there will be those that want to wait for the ongoing de-risking. As a strategy, I think you can be open to those things, but you can't be reliant on someone coming to you with a deal that you like at the point in time that you want it. So we need to be driving on and continuing down this path of getting the projects to these major milestones that are going to surface that value. Because we know that if you get this project at Springpole with environmental assessment approval and with agreements with the local and indigenous communities around the project, where we're hopeful to be able to really drive toward some real economic partnership opportunities there, I think that leads to a very, very different outcome for the shareholder.
Okay. And let's just one final thought on them, because I know you could place us to be. Are we allowed to say it's your birthday? Can we say that?
Yeah, sure.
Best wishes.
Okay. Thank you.
32. Congratulations.
Yeah, exactly. Again, yeah,
beautiful.
Multiple of times. Yeah, exactly.
I hope it's better than your last 32nd birthday. And on before that. Okay, with regards to obviously the 2,500 bucks, we every time the market goes up, everyone's got an opinion as to why. Every time a company stock comes down, it's shorting, naked shorting, all sorts of things. Everyone's got an opinion, right? It's 2,500 bucks. Everyone's been calling this for a long time. It hasn't come. 3 years it hasn't come. Printing money for fun. It wasn't responsible in the gold market. What do you put it down to? Is it central bank buying again, or what?
It was what has carried it from 2,000 to 2,400 was largely the central bank buying. And then I think what you're starting to see now is inflows into gold ETFs in North America again, right? Because there are a lot of people who didn't believe it for a long time, and now all of a sudden they believe it. And that's when you start getting real momentum. And what I find very interesting about that, it's a very kind of end of a bull market mentality where, I'm happy to miss the first doubling of the share price, but, I'll get in when I see things on an up trajectory. The reality is the gold price is up this year, 30+%. And you have gold producers, equities, and many of them are up now 30 to 50%, some of them higher than that. And you've got broadly a basket of gold developers that's still sitting down on the year, down certainly over a 2-year time frame. We kind of charted in our investor deck, down 50%. So you've got these development projects trading at all-time lows. You've just had an advanced stage development project sell for $200+ an ounce resource. A lot of that capital's already been taken off the table. If you looked at the volumes of Osisko over the last week and a half since the announcement. There's a lot of that there. So, $1 billion plus has kind of come back, I think, looking for a home in the development sector, or in the mining sector in general. But this, I think, is an unbelievable opportunity for people to still be finding value, because it's not just investors that are going to be looking at this change in the development sector. It's also going to be corporates that are starting to look at that as well. And we're seeing that increase in activity. And it's very simple. Again, similar thing we've been talking about for 5 years. They haven't found anything through exploration. They haven't been developing their own capacity. And there's a lot of mines that are starting to reach the end of their mine life between now and 2030. So this development sector is going to be a core focus, I think, for the industry. And it's a great opportunity for investors to get in ahead of that realization right now.
Okay, so that's in industry. That's strategics. They're constantly looking out for which assets they should be focusing their attention on, and companies like you will continue to advance your case by de-risking your projects. But it seems to be M&A is thick and heavy at the moment, as it always is when the gold price goes up. And you made a good case for that earlier as to why you kind of map to that kind of profile in terms of what people are looking, what those institutions and strategics are looking for. Let me talk about retail, right? With this M&A, obviously, companies have been bought, shares have been sold, money has been received, and there's going to be a redeployment of capital, whether that be from ETFs, whether that be from other kind of major shareholders, and they're going to look into just where they deploy that capital. The best, again, profile is that you would be arguing of company. Do they go for more? Do they stick with what they know? I.e., the type of company that just made them some money would probably be the most sensible type of investment they could do now. But the choice is theirs. Or do you think that with a higher price gold environment, the psychology changes and people lose their minds, tiny minds as they always do, and they go for higher risk profile type bets in the marketplace? I mean, what do you think? What have you heard? What do you believe?
So we've been seeing a lot of people with the thesis of you should be looking for the next project that's going to go through that same value ramp, right? The next project that's going to be bought. And you've seen a few shares of companies that have very clearly been bid up on very, very large volumes on the, over the course of the last week. And generally they are advanced stage developers with good projects in Canada. I just think if you are looking in that space, I think the best way to make some money, you've just sold a bunch of ounces of gold at $200+ an ounce. Maybe it's time to go and look for the deep value ones now that are the ones that you can take. And we're not alone in this camp of trading in that kind of $10 an ounce range. But, look for the ones that are in advanced stage, that have done a lot of the hard work on the permitting front, that your time frame to those major catalysts is shorter, and that you can get in, still in that kind of $10 an ounce or less. If you can find those, I think those are gangbusters. Now, I'm biased because, our company is one of those. But that to me is, you don't need to overcomplicate this. You've just sold high. Maybe it's time to buy low. If you believe in the trajectory and you're looking for things with leverage, big projects with big ounces in tier 1 jurisdictions give you great leverage to this environment we're in right now.
Okay, then on that happy note, happy birthday, Dan.
Thank you, sir.
Go
Much appreciated.
Fun. Good to speak to you. Markets seem like there's a lot of fun at the moment. We'll see you soon. Okay.
That sounds good. Thanks, man.